Honorable Joey Sarte Salceda, the honorable members of the House of Representatives and distinguished guests, good morning. So we'd like to thank you for inviting the BSP to the Parliamentary Intelligence Security Forum. And in this morning, I will be talking about digital currencies with focus on the initiatives that are currently being undertaken by the BSP. Now, the International Monetary Fund defines digital currency as a digital instrument that is issued or represented by distributed ledger technology, meaning that multiple devices all over the world and not one central hub are constantly verifying the accuracy of the transaction. Digital currencies can be classified into two main categories. The first is central bank digital currency, and that can be again further subdivided into two, a wholesale type or a retail type, and second, a private digital currency, and this category includes the cryptocurrencies such as bitcoins. So, central bank digital currencies, or CBDCs, in simple terms, is like a digital banknote. It can be used by individuals to pay businesses, shops, or each other, in which case it's a retail CBDC, or between financial institutions to settle trade in financial markets, a wholesale CBDC. The second category, the crypto assets, these are actually more volatile assets, and this gives holders the right to access a product or service from the issuer. In contrast to CBDCs, which are considered risk-free as they are backed fully by the central bank, private digital currencies such as Bitcoin are not risk-free. They are neither the liability of any government nor any private entity. In our case, the BSP, we consider CBDC as a potential form of central bank money in digital form and not a digital currency. So, in this if we look at recent trends, one of the main motivation for wholesale CBDC issuance is the desire to enhance cross-border payments, as well as to alleviate the key constraints of limited operation hours, the length of existing transaction chains, and complex compliance checks. In our case, we are a member of Project Nexus. This is a BIS, Bank for International Settlements, Innovation Hub project which aims to interconnect fast payment systems across multiple countries, reflecting a desire to reduce transaction costs, enhance financial inclusion, and decrease reliance on external payment rails like SWIFT. So as you can see, our motivations here in for the Central Bank of the Philippines, we are interested in pursuing initiatives that address some needs that we perceive are very important for the Philippines, including making cross-border transactions more efficient, less costly, to benefit the segment of the population, the important segment of the population, that is our overseas Filipino workers. There's a second project of which we are an observer, and that is Project M-Bridge, which is now a multi-CBDC initiative led by the BIS Innovation Hub. So the membership of Nexus includes the Philippines, Singapore, Malaysia, and Thailand. M-Bridge includes central banks from Hong Kong, the UAE, China, and Thailand. We're not yet a member of M-Bridge, we're an observer. On the other hand, central banks have taken a gradual approach to adoption of retail CBDCs. On the part of the BSP, our initiatives focus on wholesale CBDCs. For retail CBDCs, there is a risk that the adoption of a retail CBDC could lead to a shift by the public from commercial bank deposits to the central bank, which would reduce banks' overall deposits and potentially disrupt banks' role in credit intermediation. Also, remuneration is a design consideration for retail CBDCs, rather whether the central bank should be paying interest on retail CBDC accounts. And the existing legal frameworks for money, payments, and central banking may not adequately cover CBDCs, in particular retail CBDCs. And all of these factors lead to our focus on a wholesale CBDC. So here, let me go into further detail into our initiative called Project Aguila. This is our pilot wholesale CBDC project, and it consists of two phases. The first phase, which is system selection. This is already finished. And the second phase is proof of concept. In this, we have designed a sandbox environment to test the wholesale CBDC prototype, incorporating governance, risk management, and security controls. So again, this phase has been just very recently completed. So given this, the next stage is to go into pilot testing. The results from our undertaking so far highlight several benefits and policy implications. First, that the wholesale CBDC system can enhance liquidity management by enabling financial institutions to transfer large value funds in real time, even outside regular banking hours. And this will improve payment efficiency for businesses, government entities, and financial institutions. Round-the-clock operations can bolster financial stability by reducing settlement risks and ensuring continuous fund availability even during crisis. So moving forward, our plan is to explore additional wholesale CBDC use cases. We're, again, in this respect, focusing on two areas. One, tokenized financial securities, and second, cross-border payments, as with Project Nexus. So here we are developing a strategic roadmap to guide testing and implementation. And we are continuing stakeholder engagements with financial institutions, regulators, and multilateral organizations. Let me just show you some developments with respect to digital currencies. This is used in the Philippines, and it shows us the monthly value of crypto asset transactions by type of investor. So as you can see, these have recently increased. Actually, much of the increase has taken place just in the second half of last year. But the data is based on data from two virtual asset providers, and it shows that individual traders continue to dominate the Philippine crypto market, though transactions from international traders have also shown some growth. On the other hand, of much more concern to the BSP would be the digital transactions of fiat currency. This is all digital transactions in general. And we have seen from our studies that digital payments actually are not entirely replacing cash. As you can see in the left panel, there's continued growth of currency in circulation, and I'm comparing that to digital payment transactions in the right panel. It's not a replacement, but actually it's complementing. Digital payments and cash are actually complementary, with many users still relying on cash-in transactions to fund e-wallets and digital accounts, particularly those without bank access. Additionally, transaction fees and income constraints have continued to influence digital adoption. As a result, while digital payments continue to expand, cash remains a widely used payment method in certain sectors and situations. While there are geopolitical concerns with respect to CBDCs, we're looking at CBDCs in particular to, as I've said, reduce remittance costs. Digital currencies can significantly lower remittance costs, benefiting economies that rely heavily on remittances, such as the Philippines, India, and Bangladesh. Private sector innovations, such as Singapore's Partior, are also addressing remittance pain points by enabling instant cross-border transactions with enhanced efficiency and transparency. CBDCs can also provide strategic advantages through digital payments infrastructure. In Asia, initiatives like Project Nexus and mBridge aim to develop regional payment networks to reduce transactions cost and reliance on external payment systems like SWIFT. Over the long term, one implication of more continued use of CBDCs could be reduced reliance on the US dollar. And on the other hand, something that we need to watch out for would be a possible use of CBDCs to bypass traditional sanctions. This has happened, for example, in the case of Russia, accelerating the development of the digital ruble to circumvent Western sanctions and facilitate trade with China and Iran without relying on the US dollar or the SWIFT system. So, for its part, the BSP remains mindful of the geopolitical implications when selecting foreign jurisdictions, other central banks, and international corridors for cross-border CBDC testing and development. So, to wrap up, first, the use of privately issued digital currencies as a means of payment in the Philippines has remained limited despite the increased volume of digital payments. Majority of the central banks, as with the BSP, are adopting a gradual approach to retail CBDCs due to policy concerns and are instead exploring use of wholesale CBDCs for cross-border settlement. As I've said, the BSP is doing the latter with Project Agila. The BSP subscribed to the Bank for International Settlements principle of do no harm for CBDC development. This means that new forms of money that would be supplied by the BSP should continue supporting the fulfillment of public policy objectives and should enhance the BSP's ability to carry out its mandate for fostering financial stability and payment system stability. Thank you.
Thank you, sir. Thank you, sir. We have